Okay, let me ask you something. Do you think home prices in 2026 are going up, down, or kind of stuck in the middle? Because when you look at what the big housing experts are predicting, the interesting part isn't one single number, it's how close their predictions are to each other. And when that happens, it usually means the market is changing in a quiet way, not a dramatic one. What pushing prices right now isn't hype anymore. It's things people feel every day. We're talking about mortgage rate, we're talking about monthly payment, and how many homes are actually for sale. That changes how buyers and sellers need to think. A lot of people are guessing right now, but the chart tells a clearer story. So let's break it down right now next. Before we go into the information about home prices in 2026, let's look at the sales activities, okay? Because that is actually one of the important factor the home buyers are looking at right now, and also important for the seller when you decide to list a home on the market. Basically, resale is holding and new home are struggling. That's the conclusion right there. January had fewer working days than both the January and December of last year, right? So the headline in closing look worse in reality. Specifically, what is this? New home share, okay? We have about the new home closing fell sharply, very strong, okay? This is actually the lowest level in the nearly 10 years, 18%. Okay, only 18% of the homes that sold in Maricopa County is actually new home sale. This is like I said, the smallest share for the last 10 years. Okay, the resale home actually performed better than that, better than actually expected, with more closing per day than January of last year. We see that the buyer are still active, but they're choosing the resale over new construction. Okay, the total closing were essentially flat year over year. It doesn't change much. Comparing when you're comparing between January of 2025 versus January of 2026. Okay, now like I said earlier, we do have less working days in January of 2026 compared to 2025. So even though the number right now is flat, right, but it's actually worse, less number of home that is closed. Okay, the reason why the resale is closing more, I told you many times already in other videos. I think the reason is that the price, right? Because as of the time of recording this video, right, the resale home is less about $70,000 less than the new home for sale on the market in one same area, right? So the buyers start to think whether they should sacrifice the 70,000 to get the luxury of the new home, or they should consider buying an older home in the same area, right? In some area, when we say older, it doesn't mean the worst of the worst, right? For example, Chandler, home in 1990s in Chandler still feel very new and very fresh, especially when they are fully upgraded as well. Okay, so that's one of the reason why I think that the reason why new home that doesn't have the advantage anymore compared to the resale home. Okay, so let's next. So that's the resale, that the sale activities. Next, we are going to talk about the median sale price. The overall median sale price about 470,000. This is actually the lowest level since 2024. Since 2024, right? The resale prices declines more than new home prices. And the new home price appears to be stable. And this is exactly what I'm talking about, because the resale home owners, they feel the pressure of the new home, right? They cannot offer the same level of incentive like the interest rate buy down, like sometimes 2 or 3% down, less than the market interest rate, right? And they may not be able to offer the same closing cost incentive like a new build home, right? The only way they can do is to lower the price. And that's the reason why. And they more flexible in dropping the price in competing with other homes. Because with the new build communities, when one home in that community lower, they normally lead to other homes in that community lower as well. So it's really difficult to negotiate with the builders in that situation. But for the one resale homeowners, they have more flexibility and they don't have any restriction in terms of dropping the price, right? It's just they can just do whatever they feel is good for their situation, right? Last but not least, the new home prices appear to be stable, but this does not include larger builder incentive, right? We're talking about rate buy down and closing cost incentive already. They stable because they try to offer the same incentive for the interest rate buy down and for the closing cost credit. And that's the reason why, as you see, well, I mean, the buyers may start to choose the resale home rather than new build community. Okay. Market direction. This is very interesting because anytime that we're talking about market direction, I'm very much happy to share with you the comfort report number, right? Which here's a couple information here. Okay, we have 9 cities that move in favorable to the buyers. Okay, last week, and this week we have 13, 1-3. Okay, so it's a big jump. It's a big jump for moving favorable to the buyers market. Okay, only 5 cities that is in favorable of the sellers market, of the seller. Okay, so that's the reason. And overall, we see that the CMI dropped about 3.6% compared to the previous week. Okay, so I'm sorry, previous months, and this is a much larger drop compared to the last week drop. Okay, some of the strongest changes happening in some of the cities used to have the biggest momentum for the seller. We're talking about Fountain Hills. That is 20% drop from 156 points to about, from 193 points to about 156. Okay, so this is the big drop for Fountain Hills. The other big drop including Goodyear, Scottsdale, Queen Creek, Paradise Valley, and Cave Creek. Each of them dropped about 7%. And 11% for Goodyear actually. So this is actually the second biggest drop in those cities. Okay, Glendale was the only one stand out. Okay, because Glendale is a 4% increase. Okay, the other one is Mesa and Phoenix, 3% increase, 2% increase, Avondale 3% increase. Those are the cities that is increasing toward the seller. Okay. So overall, we still have about 9 cities that in the seller's market, 3 cities that in the balanced market, Peoria, Avondale, Paradise Valley, and the rest, 5 cities, 6 cities that, actually 6 cities only in the buyer's market. We're talking about Goodyear, Santan Valley, Surprise, Queen Creek, Buckeye, and Maricopa. Okay, so what does that mean? That means the market has shifted. Okay, when you look at the dollar volume instead of unit count, okay, a clear pattern emerged across the greater Phoenix. Okay, and this is what we're talking about, the shift here. 39% homes over 1 million now represent 39% of all dollars spent, up from 25% about 3 years ago. That's a 56% increase in the market share at the high end. Okay, in the meantime, okay, home that is under 500 actually lost 27% of their dollar share. Okay, the 500 to 1 mil drop about 10%. Okay, so more homes that is sold in a larger volume, and then less homes that are sold in the lower end home price. Okay, so that is very interesting movement. Actually, Phoenix have more people, buying at the high end than the people like a first-time home buyer or maybe a second-time home buyer. Maybe they're looking to move. Okay, luxury end you're doing great. Okay, okay, demand. How about the demand? Okay, is not weak at all. So despite the concern about the showing demand, okay, we're talking about like no homes for sale, or like no home, no showing at all. If when a home get on the market, okay, the total spending on the single family home is actually reaching the number much better than 2023. We see in January 2023 is only 1.87 billion. In January 2026, it's actually 2.5 billion. And yes, with the B, that's nearly about 34% of money spent overall. So the buyer still willing to pay for the Phoenix market, for the Phoenix Chandler market, right? But it wasn't this number right here, by the way, similarly to the previous information, you're gonna see that it's different depend on the price range, okay? For specifically for the low end, okay, of less than 500 is considered low, pretty much flat. Mid-range is about 21% up, okay? And then a high end, more than 1 million, is 113% up, okay? This helps explain why a lot of homes activities in the Northeast Valley, where the luxury communities, have seen a stronger activities. Okay, specifically, we have about a median sale price of 1.28 million dollars in that area. Outside of that area, outside of the Northeast area, only 450. When we take away all the homes in the Northeast Valley, okay, 93% of homes sold outside of that area is actually $1 million or less. Okay, so as you obviously you see here's a big change. Okay, the demand is no longer, I mean, for the less than 1 million, less than 1 million, less than 500, still struggling with the sale activities, with the home price as well. But however, with the high end, you see a big movement. So if you're thinking about buying a luxury home, you may face a lot of challenging in today's market. Even a lot of people say difficult in, market and condition and everything. Okay, now let's share with you about the home prediction in 2026. Okay, how does the home price actually goes in 2026? And we talk about the large financial expert prediction home price for 2026, and here's our 16 companies, 16 financial biggest financial across the country prediction for home price in 2026. National Association of Realtors, 4% increase. Wells Fargo, 3.5% increase. Cotality, 2.4. Realtor.com, 2.2. HEPS, 2%. Capital Economies, 2%. Fannie 1.3%. Housing Analysis Pool, 1.3. Zillow, 1.2. Redfin, 1%. And Bank of America doesn't change. And only one financial expert predict a home price drop about 0.3%, very minimal. Okay, so obviously, number one, you see this is the different number. We know that different company gonna have different, data and different analysis to give a number, a specific number. You see, however, this one doesn't change much across, right? The biggest gap is only 4.3 between the biggest to the smallest. And if we're talking about $100,000 house, that's only, I'm sorry, $100,000 house, that's only $4 difference. Okay, so that's right? Is that right? Yes, $4 difference. Yes, so that's a very, very small change in home price. Okay, so let me see, 100. I cannot think in my head right now. Oh, I'm sorry, 4,000. something is not right? Only $4,000 difference. Okay, so that's number one. So very minimal change across all of them. They don't predict randomly, right? But they kind of fall within that range. Okay, the big takeaways is consistent. So that's my point. Okay, at the high end, groups like NAR and Wells Fargo are expecting 3.5 to 4% growth right here. Middle range is about 1.3, 1 and 2.2% right here. When you average all of this together, you're actually roughly about 1.6%. Okay, this is not a boom market. Okay, this is not the boom. This is not the big number. Big number, we're talking about 10 or 15 or 20% increase, right? But this is definitely not a crash scenario neither. What experts are signaling is a slow, steady, and how much more balance of the housing market. Okay, for the buyers, that means less pressure to rush or overpay. Okay, but also fewer changes to wait for the price to fall. Okay, for the sellers, it means pricing correctly is critical. Appreciation alone won't save an overpriced listing anymore. Okay, so those are the two conclusions in this video. So thank you so much everyone for watching the episode update today. If you are interested in receiving a weekly market update to your email, feel free to scan this QR code right here and get clearer clarity and more information about the market and make the right decision. Thank you so much everyone. Bye bye.